Welcome, everyone. Today, my guest is Courtenay Dunn, Director of Governmental Affairs for Intercontinental Exchange, to talk about regulatory trends and the data and technology lenders are using now to be compliant. Courtenay is one of HousingWire's 2022 Women of Influence and has been in the mortgage industry for more than 15 years. Her resume includes serving as counsel for ICE and overseeing litigation and corporate law and governance matters for MERS. Courtenay, welcome to the podcast.
Good morning. Thank you for having me.
So excited to have you and really to talk about some of the things that are really challenging for lenders right now. We are in a challenging period. Regulatory wise, what do you think are some of the biggest priorities right now?
Sure. Thank you. And thank you for having me. I think that there's in DC, we've seen a lot of regulatory movement, especially from the housing agencies in a few buckets. And I would note that the Biden administration has made housing a priority, really the way that we haven't seen from the presidential administration before. And I think the agencies have sort of taken that and run with it. Overall, I think the regulations that we're seeing can really be attributed to three topics. The first is affordability. I mean, particularly you mentioned this particular market. This is becoming increasingly relevant, although it's something that we've all been thinking about in a lot of different contexts in some new ways, which I think we'll get into in a little bit. The second one is accessibility. And sort of in the same vein, I do see there's some overlapping issues, but also some different issues in the accessibility realm. And we've seen action both from the FHFA, but then also a little bit from the regulatory side from CFPB as well. And then the last one would be accountability. And so the regulations that we're seeing from the agencies, and then also the expectations from the lender side into understanding what the rules are so that they can comply with those rules and better serve their clients.
So let's talk about that second one a little bit, the accessibility, because I do think affordability is something everybody kind of understands. What do you mean when you say accessibility, or what do you think they mean?
So accessibility to me, and from the viewpoint of ICE, we're always looking at everything from a technology and data point of view. What can we do to make accessibility better? And I think what we've seen is that, in particular, the rate of minority home ownership is nowhere near what it needs to be. Frankly, in some ways, it's worse than it ever has been. And so you ask a question, who has been able to access just the opportunity to have a chance to even apply for a mortgage? We're looking at things in the technology point of view is how we can modernize some of these processes to help our lenders get to borrowers, to let them know what options are out there. In particular, there's a lot of really fantastic programs, including from Fannie and Freddie for low down payment mortgage options. And most first-time homebuyers don't even know those exist. So they don't know to ask for them. So in a lot of ways, there's a lot of education to be done, and then just some technology to make that more streamlined and easier. And so the lenders can be aware, who do we have in our pipeline that might qualify for this, so they don't have to hear that no, and they know there's some options available, and get them into communities paying their mortgages and becoming lifelong homeowners, hopefully.
You know, on that accountability side, I think it's sometimes lenders can feel, and rightly so, that they're kind of being put under a microscope in a way that is difficult in the middle of this kind of environment. Do you feel like regulators at all look at like the macro picture of like what's happening in the industry and, say, what companies are struggling with when they talk about these when they think about these things? Or do you feel like it's more like they're like, listen, we have this mission. This is our mission. You guys have to accommodate.
So I think one thing notable over the past couple of years in this administration has been that there have been a numerous amount of notices of proposed rulemakings. We've seen from FHFA, we've seen from HUD, we've seen from the agencies. But I would also note that, in particular, I'll use FHFA as an example. They opened an office of innovation and technology. And then they conducted a listening tour, and they were coming out to mortgage conferences. They were meeting with all types of different stakeholders in the process to understand how that technology and innovation could be used along their goals, a lot of which involve their duty to serve goals for Fannie and Freddie. And I know that also at HUD and FHA, they're using it's called the drafting table. So that's another way. It's not a traditional rulemaking as we would talk about it in DC, but it is an opportunity where they literally want to say, here's what we're thinking about, put it on the table, and allow there to be a constructive back and forth. And that's very encouraging. So those of us who are, or those lenders that are closest to the consumers or using the technologies or seeing what they're seeing in their lending programs can give that real-time feedback. And again, that education to understand, okay, we saw a lot of refinances during the pandemic, but that didn't didn't achieve all communities. They reach some folks and not others. So what can we do? Another thing I know the CFPB has been focused on also is to look what was done well during the pandemic. This was an unprecedented time, and really the mortgage industry actually did a great job in a lot of ways, avoiding a lot of the issues we were worried about. And so what can we take out of that and then maybe implement it in a more permanent fashion? So that give and take back and forth, I think, is extremely helpful and welcomed really by everyone.
So one of the areas I think is so interesting is ESG. And how have you seen the conversation around ESG evolve over the last few years?
Right. We've certainly seen it evolve. And I think specifically in the mortgage space, there's a great interest now from a variety of places. So first of all, we at ICE look at making the connection between markets and certainly between different players in the mortgage industry. So a couple of big points here, I think. So first, most consumers only see their lenders during the mortgage process. And there's a whole set of markets behind that, as you all know, that are very interested also in them. So we have investors, we've seen a lot of demand from the investor side for information about the property itself. We've seen a lot of climate-related data that is being developed. And this is interesting because this is real-time data about the property. And if you think about a 30-year mortgage, a lot of homeowners are affected by climate-related issues, and that data is live and dynamic. At the same time, we've also seen investors who want to understand what you may hear called social scoring. So, of course, Fannie Mae has been focused on this space, and Freddie Mac, FHFA actually has an RFI out right now that they just published about a potential social bond program for single family. So investors want to invest in these communities. At the same time, I think that there's an opportunity for homeowners to also understand what we call the true cost of homeownership. And again, that's not just the ticket price on the property. It's understanding, there's a term, drive till you qualify. So it's understanding, okay, if I, because of my price point, am forced to drive outside of town, then maybe I have to drive to work, and then borrowers are kind of pushed into a carbon emissions schedule, really probably not even fully appreciating that. So we see this data that we didn't have 10 years ago. We didn't have 15 years ago. And I think it is part of the discussion about also affordability and what's sustainable, and helping consumers really understand their opportunities to not only obtain a mortgage and maintain it, and then the same from the investor side, because they want to understand those properties too. And people are asking for information about how can they invest in these communities.
How does ICE really bridge that gap? So you have the investor interest, you have some consumer interest, the people who kind of can connect the dots. Where do you see the lender interest, and how do you guys kind of fill that gap?
Right. Well, and the lenders are in a great perspective here too, because they are the ones who face the consumers. And then if they're looking to sell these to any type of either the government markets or the private markets, they're probably getting demand from that side as well. So they have a lot of information, but they are also looking for that. Again, they're looking at what type of, they're looking at the properties. They're thinking about how do their investors or the capital secondary markets hedge their risk. So we're looking at it as providing the most information possible to make more of that transparent, make it a little bit more uniform, and really dig deeper to understand what it actually means. Because a lot of times the data on its surface has a deeper story underneath it.
Well, and I know that I talked to someone from Fannie Mae even a couple of years ago, and just getting some consensus around what some of these terms mean, so that you can say, is this an energy efficient home? I mean, one of the easiest things to define seemingly would be energy efficiency, right? But other things are even more complicated than that. So I would think that getting some of the terms defined is the first step.
That's true. And that's often the case from the regulatory side, right? Is to sort of understand what it is that we're all talking about.
Right.
And so the prior lawyer in me would say, obviously we have to sort of understand the definitions up front. And so there's a lot of, obviously the SEC has a climate disclosure rule, and there are actually in some markets, there are companies that are already disclosing some of this information already with, previously, but in a new way. And I know that the MBA MISMO actually has an ESG COP now, where they are trying to think about what these terms mean as it pertains to, for example, they're looking at what does this mean to all different communities? What are people asking for? What's available, for example, on a uniform loan application? And then what does that mean in different or what could it mean possibly to different contexts. So everyone's looking at this, and to your point, I think that'll be incredibly helpful to go from there so we can all be better educated.
You talked about data and what we have available now. And, I would say in addition to that, the technology we have available now, right? So ICE is right in the middle of all of that. How do you feel like, when you look toward the future, what are you excited about when you look at the data we have now, the technology we have now? We seem to have some tailwinds on, yes, we want to do ESG. What's the future going to be like for ESG and the near future, not like 20 years from now?
Right. So I think from our perspective, we've seen the demand from a lot of different places. The data is dynamic. So understanding that, and I would even peel that back a little bit further, which is that if you think about, like, for example, the most top of mind example is some of the flood information. Right. So historically, we didn't have the tools to identify what the information meant as readily. And we have some data scientists who have a wealth, a trove of information about, I'm talking specifically about some of the more climate and physical risks, but understanding what that means. And then although data historically may have said ABC, what did that actually mean? Because to your point, certain terms were used back then, but I'm not sure information from even really 5 years ago, to your point. I mean, there's a lot of this is new, but even then meant what we would think it means now. Very similar to a lot of the discovery we're doing across the board in mortgage, understanding a data about what qualifies a borrower. Should we look deeper? Is it just this one piece, or is there more to it? So really understanding the true meaning of the data, or some people say the truth of the data. I think that's where we see a lot of this conversation going. And then really for us, it's giving our network the tools to comply with any rules, and really the tools to make their own assessment on where they want to be, and again, how to hedge that risk and just make it more transparent for everyone.
Hi, this is Diego Sanchez, COO of HW Media, and I'm joined today by Alex Ilazai, Chief Strategy Officer at United Wholesale Mortgage. Thanks for joining us today, Alex.
Hey, Diego. Thanks for having me. Good to be here.
So diving right in, we might be seeing the first glimmers of a rebound in the housing market. How is this playing out in the broker channel?
It's playing out really well. So we're excited about 2023. We see a lot of optimism in the market, just like we in 2022 and leading into Q4, and we're hitting the ground running really fast in 2023 here in Q1. We're excited about this whole year and what's upcoming. We've launched a lot of new products. We continue to see a lot of optimism in the broker channel overall. And obviously, when we're in a purchase market as we're in right now, that's where brokers really thrive in the more complex transactions with buyers and sellers and agents and a lot more going on. Just brokers are the best place for consumer to get a loan. So we see a lot of them continue to grow and thrive.
Digging in a little more there, most forecasters are seeing rates in the 5s and the 6s for 2023 and 2024, which means we will be in a purchase market for the foreseeable future. Is this good for the broker channel?
Yeah, it's great for the broker channel. Like I just mentioned, just assume a rate's at 6%, right? We have temporary buy down products, just as an example, where you can buy down that product. With the first year, you're going to pay 4%. Second year, you're going to pay 5%. Third year and beyond, you'll pay the 6%. And by that time, hopefully, we'll be in a position where we can refi that loan. So really, there's just so much opportunity. To me, the way that we think about it, Diego, is like you're dating the rate, but you're marrying the house, right? So you want to go out there. If you see the house that you like, you see the property you like, you buy it, right? And you worry about getting that lower rate maybe in a back half of the year or even next year. But again, it's just going to be a short-term thing the way that we think about it. And still, relatively speaking, we're not talking about massive interest rates, right? I mean, the days of the 2s and the 3s that we were experiencing in 2021, that was somewhat of an anomaly. So we expect them to come down a little bit, and all the forecasters and economic indicators are pointing that fashion. But right now, I think we're in a good spot, and brokers are continuing to win. And you can see it in our broker share and everything that we're doing. We're just having an outstanding start to the year.
Yeah, I mean, the broker channel's had a great couple of years of growth. Do you expect that growth to continue in 23?
Yeah, we do. I mean, as you mentioned, in the third quarter, which was the latest quarter, actually fourth quarter, is about 22.5% or so of the market is broker now, which is, I think, at the highest since 2009. So we're continuing to see great trends in the overall growth of the channel, and we expect it to be 33% by 2025-26. Like that's what we're expecting to see the numbers come in at. And a lot of that is being driven by just literally hundreds of retail loan officers that are leaving retail and joining wholesale every single month. So those numbers are continuing to do great. And we're actually seeing it as another example, Diego, at UWM here. We have about 400 to 500 loan officers that come in every single week for Success Track, which is a great opportunity for them to learn, develop, network, and help grow the overall broker channel together. So you're seeing a couple thousand people a month that are coming in, and that was happening in all of last year, right? And all the years, several years before that when we started. But if you think about like the times that we're in, right? Everybody talks about a lot of the negativity, and that's what the usual focus of. But the reality is, people are excited about it. Brokers are excited about it. The market's growing. And at UWM, obviously being 100% wholesale, no other company in the mortgage space is better positioned than we are.
I love seeing the confidence and the leaning in that's happening at UWM. Alex, thanks so much for joining us today and sharing your insights.
Great. Thank you. It's good to spend time with you.
Talking again, we're in this low volume environment, and lenders can understandably see regulatory issues as hoops they have to jump through. But what are some of the opportunities that lenders have to make their business better as they are implementing the technology that actually gets them to the regulatory answers that they need?
Right. Compliance is very important to us at ICE. And I think that most lenders that you talk to want to serve their clients. Everyone wants the opportunity, I think, to learn more about their clients and learn more about their potential clients. So again, this is an opportunity. We've seen, FHFA will now has a new rule that goes into effect in March that require the collection of more what they call fair lending information, including a borrower's language preference. And so this is interesting because we do see the face of the United States changing, and it gives, there is an opportunity there, to your point, to understand more about who they are serving and who they want to serve. And maybe this is in a different way than it was 10 years ago or 20 years ago or during the financial crisis. So everybody wants to be able to understand how to do their business. And once those are set forth, then to use automation to incorporate that into the workflow to the best extent possible, and to use the data and technology to do a better job serving those clients, because that's a business imperative. It's a business imperative right now. So we do see there's been sort of a new focus on some more affordability issues recently. We talked about accessibility a little bit as well. And I think that our clients are interested in looking at really making that part of their process. So understanding where the rules are so that they can just get to work and do what they do best, because really there's a old saying that the local observer knows more than the scientist, meaning that they know their clients best. They know their areas best. And so letting us use our technology to let them do what they do best, to let the LOs, get to business with people, understand who they are, what they want, where they see themselves in a few years, 5 years, 10 years, and then also help them keep that bond of connection, I think, is the goal.
That's so interesting. So we're filming this, we're recording this at ICE Experience, the conference that you guys put on. And for me personally, one of the highlights of this conference is always your regulatory sessions, where, boy, I mean, the people on stage and the people in the front row are everybody you want to hear from, and what's coming next and what's going to happen. We hear right from the regulators themselves. So, and I think one of the first times that I heard about this, about the language, being part of the forum, and that was at an ICE conference where this years ago, this is what's coming. It was Ellie Mae conference then. And I think that's one of the things is yes, now this is one of the data you have to collect. What does that mean then for lenders? Do they have to have all the forms in whatever language that person is saying that they prefer? And I think those are the kind of questions that can plague them, because they're like, at what point am I going to be required to have all of the forms or all of the communication even in the language that the borrower prefers?
Right. And this is something so first of all, thank you for being at ICE Experience. We love having you here. And this is something that I think is an ICE imperative, which is that we welcome that feedback. We welcome that feedback from our clients, because when we hear about how our clients are using our tools, if there is a new compliance matter that is being implemented, we are thinking about that ahead of time and how that fits into our workflow and what is the best way for those that we work with for that to fit into their workflow. To make that, again, more typically in a lot of cases more uniform, but to have that just plug right in. But the more feedback we receive on some of that information is the better. So I would also say that to the same point, the opening of conversation with those in DC is also helpful. We have seen actually in a few cases, and maybe in some coming up soon, maybe like the FHFA delaying an implementation date or engaging in some more conversation or additional conversations, which I think is helpful. Because again, I think we all want to set an environment where we can all be productive and make sure that that everyone understands the rules so that we can be doing what we all want to do, which is really helping people get into homes. I mean, that's the goal. Many of us that are involved in mortgage have an origin story about why we care about this. And it's certainly true for us at ICE. And that's what makes this industry so special. And that's what makes this task so important, is understanding that we are, ultimately all of us are here because we want to see people be able to achieve that dream of homeownership.
I love that. When I look at all of the things that you deal with, like, what's coming, what, you're also trying to implement it. How do you decide what your priority is going to be? So, I mean, we saw it even this week where you have the Supreme Court saying, hey, we're gonna take a look at whether the CFPB is unconstitutional or not. The winds of politics changes quite a bit, right? And meanwhile, not only for lenders who are trying to be in this business, but for a software company, for a technology company, that things don't happen overnight, and you have to have this timeline for what you're going to prioritize, what you're going to develop and then roll out. How do you make those kind of decisions when things change so quickly, seemingly on the regulatory side, as far as like what the emphasis is going to be?
Sure. So I think from a high level, we do see a secular trend towards digitization overall. And so that's been fantastic to see in DC. We have seen a lot of the offices, including, I mentioned FHFA, we've seen NCUA open offices of innovation and technology, and welcome conversation about modernization. The same for many on the Hill, right? Is that they're saying, what can we do? From my perspective, I think that housing is a bipartisan issue that everyone cares about because it's a local issue. Again, to go back to that, it's a local issue. And so there's a lot of conversation about where should we go with this? What's most important? I think realistically, another point is that in this Congress at this point, we're thinking, okay, how can we use the programs that we already have? Because there's, some believe that there is probably not a great chance that we'll get another big spending bill perhaps in the next 2 years before the upcoming elections. So again, it's turning around and looking at what do we have that we can use and how do we make that better? Of course, there's a markup today in the House Financial Services Committee about Chair McHenry's modernization of Gramm-Leach-Bliley Act. And so a lot of the things that we're looking at are investments that you might make in a time. So the volumes are down a little bit, as you mentioned, but this is a great time to get together and say, how can we make this better? ICE certainly believes in investment, right? I mean, we have invested in all the companies in the industries that we've been in. We've gone in headfirst and invested in those because we believe that the digital transformation is the way to more transparency, to getting rid of some of that friction. And so those are important pieces to us, to us in that perspective. I mean, we're not a lender and we're not a servicer, so we don't face the same obstacles they do, but we certainly want to understand them so that when we're looking at policy making in any time, but particularly when the volumes slow down a little bit and you have time to say, okay, how do we really dig into that? That's an important point of that analysis. And I do think it's important to everyone in DC as well.
That's great to hear. I do think, even when we're talking about like economic issues or whatever, either on this podcast or the feedback we get from different stories is, we're journalists covering the industry, but we're not in it. And a lot of the feedback I get is like, things are really rough right now. Like, right. We need to understand that in the way that we cover things, and we really try to keep that in mind. And that's why my question was, do you feel like the people in DC, regulators, Congress, whatever, really understand what a tough time this is for the mortgage industry? I mean, we have shed so many jobs, and volume looks like it's going to be a challenge for the next 6 months at least. Do you get the sense that they understand the pain that's going on?
I do.
Okay.
I do. And again, I think from the Hill perspective, all of them have constituents at home. And again, to bring it back to the theme, is housing is something that touches everybody. So I think everybody understands it, but I do think it's imperative to us as an industry to also provide the education. Another related point I would say is that we in mortgage use technology. We are affected by the economy in ways that are unique to other industries. So sometimes in DC, I find it's really helpful to draw that distinction and say, well, maybe you see this, or there's sort of a theme you might see on the news or in conversation, but for us, it's a little bit different, and let us explain why. And again, when you realize that you're impacting the homeowner, I think folks in DC do sort of perk up and want to understand that a little bit deeper. And of course, the agencies, they want to protect consumers, right? because we know what happens when there aren't rules. I think everybody wants there to be the rules and they want to understand them and how they work. So again, so they can do the business. But I do, the more conversation, the better, the more education. We want consumers to be as educated as possible as well. Again, because it's not just the opportunity to obtain the mortgage, but how do we empower consumers to understand how to maintain a mortgage and how to maximize, their opportunity as a homeowner. Because it's a fantastic opportunity and it's an exciting dream that comes true for a lot of people. So I'm excited to do more of that. I think there's a lot of opportunity to use technology to sort of help some historical ills that we all at our companies and also on the Hill have been working on for years. And then lastly, I would also say to keep in mind that in mortgage, again, probably a little unique to us is that it's, it's not just the federal government. A lot of us are also dealing on the state side. And so politically that presents, when you mentioned earlier, changes in administration. So that can present more opportunities and then also more discussion, because we've seen a couple of efforts to make a uniform law of some sort on the federal level. And then the states are also working on it. So again, it's a great opportunity to understand that we have the federal government working, we have states attorneys general, we have states enacting different laws. They're trying to figure out what happened from the pandemic that's helpful that we can keep in place. What do we need to improve? So this is the time. We have plenty to keep ourselves busy. It excites me to be able to work with all of our clients and talk to them about their policy initiatives and to understand from the government, like, what are your biggest concerns? How can we help all of us understand these better? So that we can all get to work and then hopefully see some more improvements, which I think we will, right? Because mortgage is cyclical, so we will see that we can come back and do even better to serve everyone that we want to serve.
I like that optimism, and I'm really glad you brought up the states because obviously, state regulation is a whole other segment, and I think about we've seen New York, their NYDFS sort of step back a little bit, but you've seen California step up in their consumer state regulation. So interesting, and always a challenge for people who are originating across the nation. So Courtney, you are a very optimistic person, especially for a lawyer. Can I say that?
Thank you. So
tell me, what are the reasons you are optimistic right now about the mortgage industry, technology, whatever?
So if I could give you a brief origin story. My mother was a notary and title agent. She's been doing that for over 40 years. And so I would come, be at home every night, and she would come home and tell me stories about how this family was in her office and got their first home. And a lot of times it would be an immigrant family who'd saved enough money to finally get a home in America, or a single mother providing a roof over her head for her kids. And so when I think about everything we're all going through, the market is down, but I want to give credit to the lenders who were able to get people into homes, because those are families who still had the opportunity to get in it. We always want to have people get into homes with the best loans that are the most affordable and sustainable for them. But in the meantime, we do see great things happening every single day. And so I am encouraged by that. I think the more communication, the better. Obviously, I could talk your ear off all day about this, but I see new tools being advanced, and I am excited for the future and to see how we can make this better than ever.
Thank you so much for being on today. Really appreciate it.
Thank you, Sarah.